Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of SEC filings. And sometimes what we find is a little bit like digging for gold, or in this case, maybe more like digging through old mine shafts with a pickaxe and a prayer. So hang on tight. Today we're diving into Bunker Hill Mining Corp's proxy statement for their 2025 annual meeting. This document gives us a peek into how the company plans to operate, who's in charge, and how they're planning to reward their top folks. It's basically the rulebook for their big shareholder get-together. Right off the bat, they tell us this is a definitive proxy statement, meaning it's the final version being sent out to shareholders. They're asking for votes on a few key things, including approving amendments to their stock and option plans, which is always interesting because it affects how much stock can be handed out to employees and directors. And of course, they want approval for their auditor and advisory vote on executive pay. The meeting itself is slated for September 18, 2025, which is a good bit in the future from when this report was filed on August 27, 2025. This gives everyone plenty of time to get their votes in. First up on the agenda is receiving the financial statements for the year ending December 31, 2024. This is standard procedure, just a chance for everyone to see the company's yearly numbers. Then they're looking to ratify MNP as their auditor for the upcoming year. This is like a yearly checkup for their financial record keepers, making sure they have the right team in place to check their books. A big one is the election of directors. We'll be looking at who's running the show and if shareholders are happy with the current board. Now, here's where it gets juicy. They want to increase the number of shares available under their restricted stock unit or RSU plan. They're asking to go from about 33.9 million shares to over 92.6 million shares. That's a massive jump, nearly tripling the available equity. This means they can grant a lot more stock to key people, which can be a good way to incentivize them, but it also means more potential dilution for existing shareholders. Similar to the RSU plan, they also want approval for their stock option plan, which is a rolling plan, meaning it can issue up to 10% of outstanding shares. This is standard practice for many companies, but seeing the numbers helps us understand their compensation strategy. Finally, the ever-popular say-on-pay vote. Shareholders get to voice their opinion on how the company is paying its top executives. It's not binding, but it's a clear message about what shareholders think of the compensation packages. Looking through the table of contents, we see all the usual suspects for a proxy statement, covering everything from how voting works to detailed information about the company's major shareholders. The company's management is leading the charge in soliciting these proxies, and they're footing the bill for all the associated costs. They're also making it clear that no one involved in this process will get special extra pay for their efforts beyond their regular salaries. This is normal practice to ensure transparency. They also lay out the rules for how to vote by proxy, including deadlines and how to revoke a proxy if you change your mind. It's all about making sure votes are cast correctly and accounted for. There's also some important advice for beneficial stockholders, which are people who hold shares through a broker rather than directly. They explain how these shares are voted and stress the importance of sending in voting instructions on time to make sure their voice is heard. The record date for determining who gets to vote was August 8, 2025. This is the cut-off date for shareholders to be eligible to participate in the meeting. All financial figures in this report are in US dollars, which is their functional currency. This is important for understanding any financial comparisons they make. Here's where we really start to see who's got a significant stake in the company. We can see that the directors and executive officers own a small but notable chunk of the company. Richard Williams, the executive chairman, holds over 7 million shares, and Sam Ash, the CEO, has over 6 million. As a group, the directors and officers own about 1.7% of the company. This is pretty typical, showing they have some skin in the game, but the real power players, the ones holding more than 5% of the stock, are Sprott Asset Management USA, Inc. and Tech Resources Limited. Sprott holds a massive chunk, over 519 million shares, representing a whopping 44.1% of the company. Tech Resources also has a significant stake with over 319 million shares, representing 31.1%. These two are clearly the major shareholders, and their votes will carry a lot of weight. This section lays out exactly what shareholders will be voting on. As mentioned, this is just to receive the financial statements. And to ratify the auditor, MNP LP been the company's auditor since 2014, so it's a continuation of an existing relationship. The election of directors is a key point. We see the nominees are Sam Ash, Mark Cruz, Kelly Cast, Pamela Saxton, and Richard Williams. Dixon Hall will not be standing for re-election. It's worth noting Mark Cruz will become the lead independent director after the meeting, which is a move to strengthen independent oversight. This is the big one we touched on earlier. They are seeking approval to increase the number of shares issuable under the RSU plan from about 34 million to 92.6 million, also specifying a cap of 10% of issued and outstanding shares as of July 17, 2025. This is a significant increase and gives the company much more flexibility in granting equity. They also need annual approval for their stock option plan. This is a rolling plan that reserves up to 10% of the company's shares for options. It's a way to keep attracting talent through stock incentives. The say on pay vote gives shareholders a chance to weigh in on the compensation of the named executive officers. It's an advisory vote, but it signals shareholder sentiment. This is where we see how much the top brass is getting paid. The company's compensation philosophy is pretty standard. It aims to attract, motivate, and retain talent. They use a pay-for-performance model looking at both company and individual achievements. The named executive officers for 2024 were Richard Williams, the executive chairman, Sam Ash, the president and CEO, and Gerbrand van Heerden, the CFO and corporate secretary. The Compensation Committee, made up of directors, is responsible for recommending compensation plans and levels to the board. They work with an external consultant, Global Governance Advisors, to benchmark pay against peer companies in the mining industry. The core principles are to attract top talent, align interests with business objectives, focus on shareholder value, link pay to company strategy, and ensure compensation is fair to shareholders by referencing market rates. The Compensation Committee looks at base salary, short-term incentives, and long-term incentives like RSUs and options. They use data from consultants and their own board members' experience to set these compensation levels. The total fees paid to GGA over the past 2 years were around 34,000 Canadian dollars each year, which seems reasonable for their advisory services. The company uses a peer group of companies similar in size, operations, and business strategy for benchmarking. The 2024 peer group includes companies like Americas Gold and Silver Corporation and Revivial Gold Inc., which gives us a good sense of the competitive landscape for executive talent. This section walks us through the company's achievements in 2024, covering financing, mining operations, and ore processing. They mention securing significant financing through a silver loan facility and a standby credit facility, which are crucial for funding their operations. They entered into agreements for a silver loan facility of up to 1.2 million ounces of silver, with several tranches being closed out in late 2024. This is a unique way to raise capital directly tied to their silver resources. They also drew down on a senior secured credit facility with Sprott Private Resource Streaming and Royalty Corp, receiving a total of 21 million tranches throughout late 2025. In June 2025, they completed a significant equity financing and capital restructuring. This involved private placements, debt settlements, and modifications to royalty and stream financing, including reducing their standby facility from $21 million to $15 million. These are all moves to strengthen their financial position. On the operational side, they've made progress on mine rehabilitation, improving access to ore zones, and getting the ventilation and power systems ready. This is all about preparing for production. The processing plant is nearing completion, with mechanical installations done and piping and electrical work accelerating. They're on track for phased plant commissioning. Bunker Hill offers its executives annual base salary, short-term incentives, or ST, and long-term incentives, or LTIP, through RSUs, DSUs, and stock options. Base salaries were adjusted upward in 2024, reflecting a competitive market and performance. Here's a look at how the company performed against its goals for 2024. It's broken down by category like sustainability, project delivery, and balance sheet and financing. On project delivery, which makes up 40% of the score, they achieved 14.5% of the points. This indicates they fell short of their targets in areas like processing plant completion and underground development, with many projects seeing delays. In balance sheet and financing, a critical area for a mining company, they scored 7% out of a possible 30%. This reflects troubles with refinancing facilities and raising additional funds, though they did secure some financing. Overall, the company scored just 34% against its 2024 scorecard. This shows a significant gap between their planned achievements and what was actually accomplished. Based on these scores, the STIP awards for the executives were calculated. Richard Williams received about $103,530, Sam Ash got $87,507, and Gerbrand van Heerden received $84,739. These amounts represent a portion of their target incentive, reflecting the company's overall lower performance score. In terms of long-term incentives for 2024, the company granted RSUs. Richard Williams received RSUs valued at about $208,000. Sam Ash got around $234,000 and Gerbrand van Heerden received about $91,000. These are tied to future performance and retention. Looking at the summary compensation table for 2024, Richard Williams' total compensation was around $596,850 after the Welfalls and $106,000, and Gerbrand van Heerden's was approximately $480, was approximately $14, and these totals include salary, stock awards, and short-term incentives. This section is crucial. It directly compares the compensation paid to their top executives with the company's financial performance, specifically total shareholder return or TSR and net income. For 2024, the CEO's compensation was about $758,380, while the average for other top execs was around $615,330 and TD $2,352. Meanwhile, the company's TSR was only 91, meaning a hypothetical $100 investment in 2021 would be worth only 91, meaning a hypothetical $100 investment in 2021 would be worth only 91 midas by the end of 2024, was also significant at over $29 million. This table breaks down the differences between reported compensation and what was actually paid. For example, the deduction for stock awards shows how accounting values can differ from actual payouts. This graph, if visualized, would likely show that while executive compensation has been substantial, the company's stock performance hasn't really kept pace. Similarly, this table would probably illustrate that high executive compensation has occurred alongside significant net losses, highlighting a potential disconnect in how pay is linked to profitability. Non-employee directors receive retainers and equity awards in the form of deferred share units or DSUs. For 2024, directors like Dixon Hall and Mark Cruz received cash retainers and share-based awards, with Hall and Paul Smith not standing for re-election. Kelly Cast joined the board in October 2024. The company maintains liability insurance for its directors and officers, which is a standard measure to protect against lawsuits. This part details the company's stock option, RSU, and DSU plans. They explain how these plans work, the number of awards outstanding, and the number of shares available for future grants. The option plan is a rolling plan, allowing up to 10% of outstanding shares to be issued as options. It's designed to incentivize those who help the company succeed. This is the plan that's getting a significant boost in the number of shares available. It's a key tool for attracting and retaining talent. The RSU plan is all about attracting and keeping good people by giving them a stake in the company's future. The big change here is increasing the share pool from roughly 34 million to 92.6 million. This is a substantial increase, and investors will want to watch how this new equity is used and if it translates into better performance. This plan also requires annual shareholder approval. It allows options to be granted, which are rights to buy shares at a certain price, serving as a long-term incentive. The plan limits the number of shares available for options to 10% of outstanding shares at the time of grant. Bunker Hill is committed to good corporate governance, which involves having independent directors, clear board structures, and ethical conduct. They have a split leadership with Richard Williams as Executive Chairman and Sam Ash as CEO. They believe this separation works best for the company's current structure, with the Chairman overseeing strategy and financing and the CEO managing operations. 3 of the 5 director nominees are considered independent under Canadian regulations. This is important for balanced decision making. The company has a majority voting policy, meaning directors need to receive more for votes than withheld votes to be elected. If they don't, they're expected to resign. They've adopted a code of ethics for their key officers to promote honest and ethical conduct and compliance with laws. This section outlines the process for shareholders to submit their own proposals for future meetings. This is a regulatory detail about how they send out multiple reports to households that share the same address to save on costs. This section points shareholders to places where they can find more information, like the SEC's website and SEDAR+. The Audit Committee is responsible for overseeing the company's financial reporting and controls. They've appointed MNP LLP as their auditor. In 2024, audit fees were about $116,756, and audit-related fees were around $110,983. With some other fees, these are the costs associated with getting their financial statements checked. Now let's talk about Bunker Hill Mining Corp as a whole. The company is clearly focused on getting its mine back in operation, which is a huge undertaking. They've managed to secure significant financing through a combination of silver loans and credit facilities. However, the 34% score on their 2024 scorecard is a red flag. It signals that many of their operational and financial goals were missed, particularly in critical areas like project delivery and financing, while the increase in RSU and option plans shows a commitment to incentivizing their team. The compensation levels, especially when viewed against the company's overall performance and net losses, warrant a closer look from shareholders. The significant ownership by major players like Sprott and Teck suggests they have strong backing, but Bunker Hill needs to demonstrate a clear path to profitability and operational success. The risk here is that without hitting key milestones, executive compensation could continue to appear disconnected from actual business performance, leading to shareholder dissatisfaction. The story here is one of a company in a high-stakes turnaround effort. They're making progress on the ground with mine operations and processing, and they've secured crucial financing. But the missed targets in their 2024 scorecard and the substantial net losses mean there's a long road ahead. Investors will be watching closely to see if they can translate their efforts into tangible financial results and a stronger stock performance. So, what's your take on Bunker Hill's approach to executive compensation and their operational progress? Do you think the increased equity grants will spur better performance, or is it a sign of over-reliance on stock incentives? Let me know your thoughts in the comments below. If you found this deep dive helpful, please hit that like button and subscribe for more corporate breakdowns. And don't forget to join our Discord community, link down in the description for more discussions and behind the scenes content. Thanks for watching, and until next time, stay sharp.